Good afternoon, everybody. Today is February 4th, 2015, and welcome to our live market analysis for the pound dollar. I'm the Chief Technical Analyst here at HyperFX Academy, and I'll be walking you through some of the trades that occurred during the US session today. Now, one of the basic skills required to trade the Forex market successfully is the ability to identify support and resistance levels, along with the ability to draw simple trend lines. And of course, this is all covered in our HyperFX workshop. We are using one of the basic HyperFX zigzag indicators today, and in my previous videos, this is an indicator that draws the basic support and resistance levels identified by the blue dots, which are support levels, and the red dots, which are the resistance levels. Okay. Now, some of the benefits of the Renko chart are they filter out the noise of wicks and are based solely on price without time. So on your chart, on your screen here, you notice two different charts. Basically, they're presenting you with the same information. However, the second chart, which is this one here, is using a Renko bar, and it filters out all of the noise that you see on the left-hand side here very effectively. So when we scalp the market during various sessions, it is essential, in my opinion, to use a Renko chart because it allows you to see the support and resistance levels very easily and very clearly while you're drawing those trend lines. So let's start. Let's begin by just identifying a few of the trades that occurred during the US session today. So the first trade we would have taken is the simple breakdown here. So we connect the blue dots here, and again, when the second blue dot is higher than the first, we can use the angled trend lines. And this may seem rather confusing initially, but as you do this over and over, it becomes much easier. So this would have given us our first down break right here, and you can see that this was a very profitable trade. This trade went for close to 20 pips. So if you're trading 10 lots, it could be a $2,000 trade that is very easily achieved here. After that, our next trade would have been this break up. Again, this red dot is lower than this previous red dot, so we can use this angled trend line again. And here we have our second break up. And again, that went for easily 20 or 30 pips. If you had missed that setup, then you would have had this break up here. Again, another very successful trade. So there you have three trades. I'm just going to delete some of these trend lines here so we don't have too much clutter on this chart. Another trade we would have taken is, let's see here, we could have taken this break up as well. Right here. And we would have taken, let's see here, we could have taken this break up here as well, which was very profitable. And we could have taken this break down right here. So each of these trades went for 15 to 20 pips at least. Except for this one up here, which went for just about 5 pips, which was still profitable, but these other trades did go for a lot longer. If we scroll to the right, you can see the other setups we had for today. If we had connected these two red dots here, we would have had an up break here. Very simple. Just follow the system and you cannot go wrong. If you had connected these blue dots and waited for the price action to close on the downside, you would have had a great entry here to end off the day. So you see here we had, I don't know, close to 1, 2, 3, 4, 5, 6, 7, 8 trades, and we had a lot of these horizontal trades that I haven't even outlined, which were successful as well. So using this very basic strategy of drawing trend lines and taking breaks once the price action crosses these various trend lines, it's a very easy way to scalp the market and make big profits. Thank you very much for joining me today, guys. I'll be joining you again tomorrow. We'll be doing another market analysis for the pound dollar. And yes, thank you. Have a great evening.